Hello, folks. Bill and Brian here with Energy Rogue here with for the weekly update. I hope you guys are having a great week. I hope it's really cold so we can burn some of this natural gas and get some of that price a little bit up, maybe just a tad bit, or maybe down, depending on whether you're actually buying it. So, hey, listen, we're going to be talking a little bit about how the oil price works. Obviously, in the last 2 weeks, we've been talking about what's going on in the Middle East. I don't know if you noticed, but a lot of times in the world, when we're talking about oil prices, we're talking about what's going on in the Middle East. And so we're going to see if we can break that down a little bit for you today. Brian, man, I tell you what, I just sort of feel like I have no control over what's going on with the oil price. It's almost like I'm trapped.
That's actually a great way to put it. And for if you clicked on this, you saw the title, The Oil Price Trap. So often at Energy Rogue, we try and take a look at the markets. We take a look at where we have been, where we are, and where we're going. And this is something that history has taught us something, and we're here to remind ourselves of that history. Not that history repeats, however, it certainly does rhyme. So I stole that
There
quote.
you
I
go.
don't know from where,
I know.
but I can't remember from where. So after the spike, I mean, clearly what has happened, everyone panics. So why did we panic? We'll get to that in the next one. But crisis hits in a typical pattern. Everyone panics, then the market corrects. Crisis hits, fear takes over, then reality sets in. This cycle is repeated across decades, across markets. Players don't change, the script doesn't change. So, or the players change, the script doesn't. Why did
Right.
oil prices jump? So we went up probably close to 40% from prior to the U.S. striking Iran, and the Strait of Hormuz shut down. And for those that don't understand how impactful that is, this is a narrow choke point that normally moves over 1,300. I thought this was interesting, 1,300 Olympic sized swimming pools of oil every single day. One pool every minute of every day, and a complete pool of oil is sent through the strait for 2 weeks straight. So this is one choke point. This is why it matters. It's one choke point with global consequences. Roughly 20% of global petroleum liquids pass through it daily. So we're talking crude oil. We're talking refined products. We're talking condensate. We're talking other products. So a disruption here doesn't just affect the Middle East. It ripples through to every gas station, airline, and factory on Earth.
That's right.
We are a
I mean,
global
it affects
commodity.
everything. It affects.
Yeah, it does. It does affect everything. There's no viable alternative route that exists for most Persian Gulf exporters. Let's actually take a look at one of my favorite sites, which is marinetraffic.com. This is the Strait of Hormuz right here. And the reason that that is important, and you'll notice that there's each one of these ships, if it's a red dot, that is an oil ship. If it's green, it's cargo. And you see a cluster of ships on this side of the strait, on this side of the strait, but nothing here. And that is what Iran has escalated the tension in the Middle East from U.S. attacks and said, okay, no more ships. What that means, 20% of the global crude supply just disappeared. Now, I contrast March of 2026 to March of 2020. We don't understand the supply and demand shocks that we're facing yet. And in March of 2020, we didn't know what the COVID supply and demand
Right.
outside of toilet paper. We knew that, right?
Yeah.
Toilet
Toilet.
paper.
Yeah. Oh, Lord have mercy. I bet there are people still using that toilet paper they bought during that time.
hmm We went to Costco and we almost talked ourselves out of buying this massive, massive amount of toilet paper. I don't know why people ran on that, but anyway, yes, prices are spiking, but we've been here before. In 2008, we reached an all-time high at $147 at the peak price right before the financial collapse. This was a record-breaking high, and inflation adjusted equals 186. I actually thought it'd be higher because I thought we had a higher inflation rate. But $186. That means if we're trading 90, 100, we're nowhere near all-time highs on an inflation adjusted metric. But what happened after the financial collapse?
Man, crash.
78%. Now, do you remember that crash? Do you remember what happened?
Absolutely. I sold my $127 hedges at that $33 bottom.
So you were working at a producer at the time.
Working at a producer at the time, and we realized that was the bottom. It wasn't going to get much lower than that, and that's when we were able to capitalize on that. I don't recommend that as a strategy, but as a one-time event, it worked out real well. About $150 million worth real well.
Yep. I remember after that crash, I actually invested in oil and gas heavily because I knew it was overcorrected. So one thing about energy markets,
Right.
they overcorrect up, down, and because supply and demand are fairly inelastic. And it's part of the
Right.
reason
But
go ahead.
most commodities will overcorrect. It's just in oil and gas, it is such a huge swing that it's not unusual in other commodities.
Yeah. Well, and what's interesting about this event is we're talking 20% impact. This is really rare because previously 1 million barrels a day would move the market 5-10%. Yes, we're up massively, but we're talking over 20% of the global market here. So
Yeah.
this is what happened in 2008. We went from 147 all the way pardon me, all the way down to $32 in 5 months. So
This is when every producer decided they wanted to be a natural gas producer.
Yeah. But you may be asking yourself a question. If you haven't lived and breathed oil and gas markets, Bill and I have since the mid-1990s. Well, Bill a little bit longer, smidge longer.
Yeah, just a couple decades longer.
Yeah. What drove the collapse? A global financial crisis that crushed demand. Industry slowed, reducing industrial oil consumption sharply. Consumers drove less as recession fears became likely. And again, history doesn't repeat, but it often rhymes. We're facing inflation. We're likely to see consumption or demand take a hit. And that's what we're already taking a look at. Let's look at
You
case
remember
study.
what started at 2008?
Housing crisis.
Housing crisis, real estate.
Yeah. Real estate. Mortgage-backed securities.
Yeah, this one's being caused by real estate. It's just real estate in the Strait of Hormuz.
That is true. 21 miles. 21 miles.
Right.
So let's look at another case study. 2022, Russia invades Ukraine and the pattern repeats. Spike, panic, then demand destruction. So prices went to $128 this time. Recession fears hardened. Inflation went through the roof, and demand destruction followed. Prices nearly fell 40% from its peak within months. So, two cases of rapid spikes and then a precipitous drop 4 to 5 months after that. So what is demand destruction and why does it always win? Tell us your thoughts on demand destruction, Bill.
So demand destruction, to me, events always cause prices up and prices cause demand destruction, which is another event. And it always happens because you always get to a price that consumers won't pay. You
Right.
always have to go past that price that consumers won't pay. Once the consumers stop paying the prices, they'll they'll change their behavior. When their behavior changes, everything that supported that previous behavior, now with this where the industry starts slowing down. So all that begins to be a fact. And then recession fears start getting in because, oh my gosh, we're not growing as fast as we used to. And so now we're looking at recession. Once again, recession fears, not necessarily real recession, but
Hmm.
real recession fears kick in. Everybody will do anything to keep from having a recession, and sometimes even that will cause a recession. And so that's how demand destruction works. And we call it demand destruction because it actually destroys the demand, and sometimes that demand can go away forever.
Yeah. Well, put a different way, if you have the option not to buy something, you won't. If money is tight, you're not going to buy it. I'm not going to buy the extra ice cream. So, oil shocks through the decades. So, in 1973, there was an oil embargo. Price quadrupled overnight. Gas lines stretched for miles, and the economy adjusted, and then prices normalized. 1979 was the Iranian Revolution. Supply fears sent prices to record highs. Demand destruction and global recession brought them back down. 1990 Gulf War, Iraq's invasion of Kuwait
Remember, we call that the
spiked.
first Gulf War.
Yeah, spiked briefly. Oil prices spiked briefly. Crisis ended. Prices retreated within months. So you're hearing a pattern. The pattern is that there's spikes and then a softening after. 2008 financial crisis, we covered that. 2022, the Ukraine war. You can see a pattern in all of these events: 1973, 1979, 1990, 2008, 2022. These are very dramatic, big events that impacted the supply side economics of oil and gas. And what will typically happen is that we overcorrect to the downside based on fears of demand destruction. So, why is this important right now? Is these history lessons are telling us that the duration varies, but the outcome doesn't change. So, is this time different? Okay, because we're talking about multiple very big events, and we're currently in a big event. Honestly, had we not had the Russia-Ukraine 2022 war, I think we already would be above the all-time highs. So that's my take. So why could this be different? Here's some conditions that could change the story. What would make it different is that if we have permanent supply loss, if the strait remains closed for months, not days, the calculus changes significantly. And why is that, Bill? So permanent supply loss, why would, if this was shut down for months and oil could not be rerouted, why um, could that be a problem?
Well, I mean, because we have not seen demand destruction yet. Therefore, it's just going to cause that to go higher and higher. Then the demand
Oh,
destruction will
we're
start
talking supply
setting
loss.
in.
We're talking supply loss.
Yeah, that's what I'm saying.
Yeah.
The supply loss will drive the demand destruction.
Yeah. And yeah. So one of the other things that could happen is if these reservoirs don't continue producing, it could reduce the capacity for that reservoir to produce at levels that it did previously. So that's one thing that could happen.
I
So
don't think it's more about the reservoirs. I think it's more about the infrastructure. The more the infrastructure we destroy, the longer it takes to repair. I mean, you could, if you destroy the right infrastructure, you could be 2 years before you see the infrastructure back up.
okay. Okay. So that could make a difference. Permanent supply loss. Another thing, say we don't have demand slowdown. Seems unlikely, but it's possible. Lastly, if there's no alternative supply, if OPEC Plus and US shale can't or won't ramp up production to fill the gap, then we're really not gonna collapse, because the price is gonna have to support it. Because one thing that people forget is we're at 70 to 85 for an entire year, and the supply engine of the
Right.
world just grinded up maybe 4%. So there's not a massive expansion plan at $70 or $80 crude. The massive expansion plan would happen at triple digits and higher. So we're not going to see, if demand doesn't slow down, we're not going to see incremental oil unless price calls for more oil to be repeated or produced. So what does history say? History says the straits will reopen, demand always softens, and supply responds. So out of those 3 points, I think supply is going to be sluggish, but demand likely will soften. Now, will the straits reopen? Right now, I don't know. I don't know who's winning the poker match, but it's getting tricky.
So I will believe that there comes a point when there's so much money involved, the straits will reopen.
Yeah.
It might not be pretty, but they will reopen.
Well, and there's conflicting reports right now of tankers making it through with Iranian permission. So,
And I think there's this game is not over yet, and I think there's a lot more things that are going to be laid out. But I think the straits will reopen. But like I said, it won't be without just call it some resistance.
yeah. Yep. So, what this means for you? The real question isn't about oil prices. The real question is whether or not the prices will stay high, and whether this time it'll show that it was different than all those other times. 50 years of data say that it won't be. The timing and duration and peak and fall, like when we were talking about the 2008, we went from 147 down to 32. Okay, so that was one. And then let's take the Russia Ukraine, 128 down to 60. What you can see is how far and how fast this one
It overcorrects, yeah.
took 5 months. This one took a little bit longer. I think this was like 6 to 8 months. But what does that mean? We're going to go to 60? I have a hard time believing that we're not going to have a higher floor coming out of this, because I think we will. So what are some of the key takeaways, Bill?
Well, as usual, spikes are always temporary. This is not rocket surgery here. This is pretty much taking a look at history and see what it's always at. Uh, as Brian showed, $186 inflation adjusted is the absolute high that we've seen. We're not anywhere near that. I don't think we're going to get near that. Because of demand destruction does work. It will bring the prices down by itself. But panic is just the absolute worst thing you can do. You just need to pay attention to what's been done in the past, start looking for the signals, and there are signals out there. And so watch what's happening on the geopolitical side. Listen, panic is extremely poor strategy. And there will be it'll get scary. I still think we got a lot of scary stuff to happen in the next couple of weeks. And, but I will tell you that it will come through this. We're not looking at nuclear war by any stretch of imagination. There's too many people involved to make sure this actually works. So, including Iran. And so everybody wants the oil to flow. Now it's just a matter of making sure that it can flow in a free and safe manner.
Yep. So one of the other things that I would take away is probably this is this is my favorite this is my favorite thing. What could make it different? If the supply loss is permanent, if demand doesn't slow down, and if there's no alternative supply. That would make it different. What history says is that the strait will reopen, demand always softens, and supply responds. As we covered today, there's a lot of different angles, a lot of different opinions on what could make it different, what could make it the same. But listen, if you follow oil and gas markets, if your business is impacted by it, if you trade it, if you want to understand how to understand the oil and gas markets, we do have a free resource. All you have to do is enter your email and first name. It is a complete guide on clarity on oil and gas markets in 5 minutes a day. So it's a free link down below. It's an ebook, and we've had a lot of people sign up and really enjoy it because it gives them the game plan to really understand the markets. And if the markets impact you, oil, natural gas liquids, refined products, Energy Rogue has 2 subscriptions for you. You can learn more about those down below. And because we stay on top of this every single day, and we cover topics like this for our members every single day. We dive deep into the markets. We try and understand not just where we are, not what happened yesterday, but where we're going. And that's a very important distinction there. So any parting words of wisdom, Bill?
Well, part of the words of wisdom is you got to look at the long game. And let me tell you something. People will do crazy things when supply gets tight. If you don't believe me, think back to when the Elmo doll was the hottest toy for Christmas. People did crazy things to get that doll, and it's a stupid doll. This is a lot more serious, and people will still do crazy things.
Yeah, very much, very much. So listen, folks, stay safe out there. I hope, I wish everybody peace and safety. And listen, if we can do anything, if you have a topic that you'd like us to cover on energy markets, let us know down below. And we
Hey,
felt like
Brian,
it was the right time to do
since we're at this time,
it.
there's only 2 types of people.
What are the 2?
There are people who are Irish, and there are people who want to be Irish. Hey, happy St. Patrick's Day.
Listen, folks, thanks so much. Thanks for tuning in. Enjoy your week. Let us know down below your thoughts on the oil markets, and we'll talk soon.